for ourselves. Let's begin with the session. So I'll set the agenda for the meeting. We will discuss more about basic candlestick psychology and the pattern. If you ask me on a simple note, I would highlight the market is all about moving a place from liquidity to imbalances, right? You guys are learning fundamental analysis. That's the, let's say, core part of market movements. But when it comes to technicals, when the big institutions move, they leave their footprint while they are making their decisions. So the decisions have been made from the fundamentals, and those are reflected in the technicals. So I'm a completely technical guy. You guys should teach me how the fundamentals work. I'm still learning. I'm trying to find time to learn as much as thing possible. But I'll be speaking completely from technical side. Those who are a fundamental follower can completely ignore technicals as well. But in my opinion, what I've seen from a little bit journey with respect to market, I've been trading the markets from 2014. So very little understanding I have about the markets, but those understanding is when you combine both FA and TA, fundamental analysis and the technical analysis, you will have an edge which can play around, and you will be in the right direction, or you'll be thinking in probabilities. You might have heard very good sessions from Enzo, Chris, Nilanjana, or whoever the tutor who's taking sessions for you guys, but this is going to be completely different. And I want all of you to take actions rather than just going through the sessions. I know you guys will be super busy, so I'll keep the actions very pretty simple. First action is going to be, I want trading habit course within 21 days. If someone follows or someone watches this recorded videos, then they should be able to trade the market. That is my whole intention, right? So the second thing, basically, I'll discuss about structures, which might be a repetition for you, about keeping a risk and reward and how the psychology, and I'll try to explain as simple as possible as I could with respect to how I see the market and how you guys can think in probabilities and work on your strength, because I'm a core believer that if you align your personal psychology with respect to the trading strategy, then only you are going to be successful. You might be a person who is walking always fast and thinking very quick and making decisions on the spot, then the scalping would be better for you. If you are kind of a person taking time to analyze and taking time to make overall decisions, because we have bought and in a such a way that all the entire human race have been bought in a such a way that think in right and wrong terms. But when it comes to market, we have to think in probabilities. Everyone says about probabilities, but it is hard and it is difficult for us to think in probabilities because we have lived our life with respect to being right and wrong. Okay, so what we are going to discuss today, uh, pretty simple: candlestick analysis, what is liquidity and what is imbalances. And when you make a decisions, when you make a trading decisions, as you know, guys, you are going to make you know thousands or 10,000 decisions in your trading career, and any particular trade which should not or which will not reflect on your trading journey. So you should be prepared enough. You should be accepting the loss and moving ahead. So how do we prepare the market and how do we prepare ourselves for this journey? So I'll be taking you through a structured Excel sheet. I'll share it with you guys. One second, give me a minute. So you guys know, right? What is your goal? May everyone knows with respect to now, for the time being, what is your goal? Can anyone type down? What is the
Goal
shortest
as in
goal? As in, let's say you have X capital let's assume you might have a $10,000 capital and your
Mm,
goal is now to achieve a 10% growth in that 10K capital and
right.
followed by a 20,000 capital and achieve another 10% growth in the 20K
Mm,
capital as well, right?
right.
Everyone is on the same page.
Yep.
I can see Madhuri's sound. Others?
Yes.
Yes, Anita. Raghuram, yes. That's great. Divine. If you guys want to, turn on your camera, feel free to switch it on because, this way I think at least I'm focusing on facing someone and discussing it. Yeah, all right. Safwan, yes. Shivani, yes. All right. So the first thing first, what we are going to do is we are going to plan. In order to be a winner, you have to plan to win and prepare to win and expect it to win, right? So we are going to plan how we are going to achieve this. This seems very quite simple, but when it comes to the market, it is not that easy. So how is the 21-day trading habit is built? You'll be focusing on 21 days. Let's say every single day you can focus on four trades, which you might have already discussed. But those four trades, you are going to categorize whether you are going to trade on Asia, London, or New York, whichever the session you are comfortable with. And then you can focus on multiple assets as well. So what I do is basically I focus on 9 assets on every week, and then I narrow it down to 1 to 3 assets which is working in my favor. So I create a plan for the weekly and then filter it down like let's say 3 to maximum 3 asset, and I'll mainly focus on some of the assets which I can show you guys. So these are all the assets I trade basically: gold, BTC, Nasdaq, UK 100, FTSE, Euro USD, USD JPY, DAX, cable, and Bank Nifty. All right. So when I create my weekly plan, what I do is basically I write down and map it out 20 days candle structures, weekly candle structures, and then daily candle structures. This is what I create for the weekly plan. Then on a daily basis, I watch how the 4 hours are playing around, and within that range, if whether we can have a scalping opportunity. I'm a scalper basically, but I do hold momentum trades, intraday trades, and even positional trades as and when the trade matures itself. So I do add to my winners. Why I'm saying we will discuss in detail in the coming sessions, but how to add to your winners, how do you manage your positions, how do I do fixed fraction position sizing, those are all the topics which we are going to discuss in future. So coming back to the plan. Okay, so you guys know that you have to hit a 10% growth and you have maximum drawdown per day is 1.5. If I am at your situation, this is what I'd be doing. Let's say I'll filter it out, all the assets, and then I'll try to do, let's say, 4 trades a day. And on those 4 trades, I'll keep maximum $25 risk per trade. 2 trades I'll be focusing on London, 2 trades I'll be focusing on New York, either Asia or London, and purely on the New York sessions also you can trade. Whenever there is a big news events happening like FOMC or NFP or even CPI data, I do take 2 step back because I'm a completely clueless when it comes to fundamentals, and I'm trying to learn, as I said. So those times I'll stay away. But if you are in the floor, if you have the live squawk, then you can make most out of the market if you're right in the direction with respect to the news events. So the meet and bus would be much more better for you guys when you're trading the news events, right? So the simple plan is if you risk $25 and if you take 4 trades per day, Madhuri, what happens if even if you lose 4 trades?
I'll be negative.
Negative what percentage of the capital?
1%.
1% of the capital. That's the
Yeah.
maximum loss you can ever have if you
Hmm.
are planning to, go in a long run,
Yeah.
right? This particular point, anyone and everyone who is taking sessions to you will be repeating this, okay? And at the same time, you can plan on the risk, but in my opinion, when I say, in my opinion, please take it as there is no fixed reward system as far as I'm concerned. Why I'm saying this? Because risk is the only thing which we can control and which we can work on with respect to the markets, but the reward might be changing. Sometimes even I have rided positions 1:8, sometimes have exited at scratch when the positions was moving on with respect to 1:2 or 1:3. Even that positions I have closed in scratch as well. When I say scratch, like a break even trade. But when you follow 4 trades per day, even second day, even if you lose, you're going to lose another $100, which is 1%. Third day, even if you're going to lose, you're losing another $100, which is 3%. And fourth day, fourth trade, if you just stop it before that, you are still within the limits of the account which you are managing, right? So you have roughly 19 trades which can go in the wrong direction, but you should be still okay when you're trading with respect to the market. Because why I'm saying this, most of the people who are looking for any challenge accounts or funded accounts, what they tend to do is they tend to achieve the target. Consider this as a funded account, okay? And most of them would be tend to achieve the target within if 4 days or minimum days. Just give me a minute, sorry. So if minimum days are 4, what they tend to do is within 4 days, how do we achieve that target? That's what they usually focus. So here, if you focus for 21 days within this parameter, then let's say roughly fourth day, you're going to blow your first account. Even if you lose every single time. On the second 21 days set, that is going to be your level 2, right? Now we are discussing on the level 1, the first trade till 21 day, and the level 2 would be another 21 trades, and you'll be completing with respect to 38 trades. Roughly, if you're losing the entire 38, even that is fine. You'll be going ahead with the level 3 with the same method, but I have given incrementally increasing the capital. You can just focus on the 10K for now. But this goes with whether you're handling 10K, whether you're handling 200K, the same risk is same. So quarter of a percentage is what you guys are risking. And then when it comes to invested capital on a 100K or a 200K, that equation remains same, and your psychology and the risk management which you have uh, prepared yourself will be completely okay. Sometimes what happens, this trade, let's say $25 risk and a $75 reward. Let me just parallelly make a trade so that where is the charts? I want all of you to look at this chart and tell me from 4065 in next 1 hour, let's say 30 minutes, we will take it. In next 30 minutes, whether the gold is going to go up or down. Can you all comment down? Long or short? Ragram for up. Okay. Ragram, could you please count down, how many votes we are getting for long and how many votes we are getting for short? So we have one long, we have one short. What's your good name? I can see just M. Safwan long, short. Suragram long, two long, unknown. Can't say. Now I want you to say at least long or short. There is no neutral at the moment. Short, short, short. Long. One. I'm just counting the longs now so that let's assume everyone is short. 1, 2, 3, 4. Thank you so much, brother. So we have 4 longs, and long means it goes up. Short means it goes down. 4 longs and 6 short. So 60% short and 40% long, right? Now, I have added one position and I'll tell you the result. Whether it is going long or short after 30 minutes, okay? So, why I have asked all of you to comment whether the market is going long or short. Even what you guys can do is basically flip a coin. If tail comes, you're going long, and head comes, if you're going short, and do this exercise for 100 times by managing the risk reward of 1:3, and you will be a profitable trader. Then you all might be thinking why we are all learning all of these stuffs in order to achieve, let's say, a financial freedom, or in order to achieve a knowledge. But the choice of flipping a coin, it has a series of probability, right? Whether the tail or head, or the randomness of the coin coming out 10 times tail, or a 10 times head, or a let's say consecutive head and tail, uh, one after one. It could be the randomness. So that is the randomness which is happening inside the market. But if you understand that pure logic, from tomorrow onwards, if you want to take a demo account and create a demo account and create a 100K in that demo account, and every time you flip a coin, when tail comes, go short on gold. When head comes, go long on gold. Keep 10 points. When I say 10 points, 4069 to 4079 as 100 pips, you keep the stop loss, and 30 points, 300 pips, you keep the target, and leave that trade as it is. You will see the result. So when I'm saying if you even flip a coin and still you follow the risk management, you can make money, then what is the point in learning fundamentals? What is the point in learning technicals as well? So learning that, you're adding an edge to your strategy. You are adding an edge with respect to whether the market can go in your favor or not. If it goes in your favor, then how much money are you making? If it is not going in your favor, how much money are you losing? Sorry, guys. So that's the simplest thing which we are going to discuss. Okay. So far, so clear. Any doubts, any questions, please do let me know. If it's break 4082, it will be long. Okay, that's fine. So any questions, any doubts, Kevin, Ragram, Safwan,
Hi, Sinu.
Tushari?
Hello.
Hello. Yes, brother, please tell me.
Yeah, so I just wanted to confirm. So when you generally mark your Asia or your London like high or low, are you marking it with respect to the overall time that the market is open there, or you're just taking the when it opened like the most busy periods?
Okay, so these sessions, there is an indicator which you can, Lux Algo Smart Money Concept and the indicators. You can click on that. I have added couple of indicators which makes my life much more easier. So there is an ICT kill zone which you can do the settings. So for Asia, it would be from 8 to 12 o'clock. For London, 2 to 5, and 9:30 to 11 is the New York AM, 12 to 1 lunchtime, and again 1:30 to 4 o'clock New York PM session. These are all the time zones with respect to UTC.
Okay.
Yeah. So with respect to this, if you consider what is our time frame, let's say 4 hour or 5 hour difference, right?
Yes.
So 5 hour difference, like 1 o'clock to 5 o'clock, those 4 hours, major liquidity happens on Asia.
Okay.
So 1 to 4 is the Asia timing which I have marked. Even people consider 12 to 5, that is completely fine. Okay. So that
Okay.
depends upon how you are viewing the liquidities. But even if you see Asia high, this one, if market takes out Asia, now what has happened? Asia have been taken out, and then sellers are aggressively pushing the market, but buyers are giving a tight fight with respect to how the market is pushing from here. We will come to this point, because if we start discussing this, then from someone who is starting completely a beginner, would be difficult for them to understand. That's why I haven't started even with this, but I'll come to the charts. I'll explain about how I have done all these settings, because I have a power of 3. This is the daily candle which shows what was the move happened for the whole day. Even parallelly, when I'm looking at 1 minute time frame, when I'm looking at 30-minute time frame, when I'm looking at 4 hour time frame, I can see my daily, so that
Okay.
whether I'm buying or looking for buying opportunities with respect to daily when the market is heading higher, or whether I am buying when the market is heading lower. So that's how you differentiate between thinking in right and wrong versus thinking in probabilities. So we will discuss those points in the later sessions. Okay. Anything
Okay.
with respect to whatever we have discussed? Any questions, any doubts?
No, not right now. Thank you.
Okay, all right. No problem. So there is no, right and wrong answers. You guys can all stop me whenever you feel to, but we might deviate from the topic. So we can come back to the sender again. Last 1 minute, we will keep it for if anyone has any questions or doubts. Okay. So since there is no questions, what are we going to do? So this is the small commitments I want from all of you. So what have we discussed so far? What are we going to do? The first thing, we are going to create a template, and we are going to follow 21 trades. It could be for 21 days. So each 21 trades has 4 days to 5 days, so that you can complete at least 104, 105 trades within 21 days. That's what we are planning. And how are you guys planning? You guys are going to filter it out more than, you can decide that, but I would suggest filtering out your favorite 9 pairs and planning it on a weekend and then executing the plan on the daily basis. Is that
Sorry,
clear?
I have a one question.
Yes,
Um,
please.
I'm like still confused with this how to manage the risk because
Mm-hmm.
when we make the trade, so normally like it's ask us to like uh, trade at 0.01.
Mm-hmm.
So now I'm confused with this like 25% and then 0.1. So like could you please bit explain for me like that mean like if we put 0.01% of risk when we make the trade, then how is related to like 25%? Like I'm a bit
No
confused
problem.
about this one. Like
I
I'm
got your
trying to
question.
like understand.
No, that's
Uh,
completely fine. I got your question. Let me try to explain it with respect to.
because I always make the loss, like when I make the trade, so I'm very less chance to like make the profit for my case. So that's what I'm like confusing now.
No problem. That's completely fine. So I'm going on my funded account, start a new trial, get free. Anyone else has the same question? I mean, like, are you guys clear with respect to how to set your $25 risk within the platform? Okay. So guys, listen carefully. So you have opened your account. So now I'm just explaining you with respect to the E2T prop. You can take any account for that matter. So now within E2T prop, let's assume XAU USD if you are trading. So now the market is trading with respect to 73.74. So I'm not sure if I can, share my screen, but let me try. So this is actually a trade which I took, a couple of minutes ahead. 4070 is the entry. Now it is $3, 3 points up. Now this trade, we can keep it even break even. So I went on long where the majority was short that time. Not to prove that you guys are wrong, I had a long bias with respect to my plan. So that is actually did. So if I want to take that particular trade again, how I'll be planning, that trade might get hit with the stop loss. Now we have just reacting on this order block. We will come to that with respect to a structural break happened towards downside. And now I'm taking a counter trend trade, which means I'm going for a short position. So now I can keep my stop loss here. If I keep my stop loss as 4080, then I'm risking $5 for this particular trade. If I enter right now, then I'm risking $5 for this particular trade, right? Now, if I take my take profit is, let's say 40, my entry is going to be 4078 and my target is going to be 4064. Okay, I'm making $10 profit. So this is going to be roughly 1:2 risk reward. And if I increase my position now to 0.02, I'm risking $10. If I increase to 0.3, then I'm risking $20 for $25 risk. So I'm risking $22 right now to make $22. So this is going to be a 1:1 trade. And if I keep, sorry, stop loss and target again, let's assume if we are doing a buy trade, my stop loss is going to be 4064 and my target is going to be 4084. Now I'm risking $8 to make $11. Is that clear? So it always differs with respect to how much quantity you are going to take and with respect to what is the loss level you are ready to accept. If instead of, okay, if I am going micro scalping, if I say that before this level, if it goes, then even I can increase my quantity size. Now, even with 0.4, because I'm risking very, small amount, even with 0.4 or a 0.6, I'm risking only $16 for a $80 profit. Now I'm doing 1:4. If I go with this trade, let's say I'm risking $19, 0.1, I'm risking $31. So I'm going ahead with 0.7 and placing this trade order has been successfully placed. Now my entry is 4071.38 and my stop loss is 4068 and my TP is 4084. So what is my risk on this particular trade?
Gap between the two, opening price and stop loss is our risk.
Yeah, that is the only thing which we can control. And if your stop loss is higher, let's say if you're entering here and if your stop loss is very tight, then there is a chance that stop loss might hit frequently. But with that, if you get a right direction, you can even maximize your profits, right? But if your stop loss is bigger, then you go with smaller quantity, but at the same time, your reward might be smaller. So that has to be planned with respect to what kind of trader you are. That's how, we have discussed whether if you're a scalper, then you can do, scalping within a 1 minute time frame. You can do it in a 5 minutes time frame. You can do it in 15 minutes time frame, and you will find multiple opportunities. Being a scalper, myself, that is something which uh, you can call it like, whether if you started driving the car, then you're going for a racing. So that's how you can think about scalping when you're doing actually scalping with respect to the market. But if you want to go, take a BMW, go for a long journey with respect to having that luxury of enjoying that, travel, then you should be a positional trader with respect to let the market do whatever you want to do. But you can play around with the market with respect to low quantities. I'm not saying $25 should be your risk. That should be your maximum risk. I hope I have answered your question.
Yeah, that's fine. Yeah, thank you.
Yeah. All right.
You mean
So
like per trade we can maximize the maximum loss should be $25.
that should be the ideal scenario. You can do more than that, but I would recommend you should not do more than, 25,
25. Okay, thank you.
right? So what happens if you do that? What is going to happen? Let's say when you do $25 per risk and when you trade with respect to the market. Now look at this particular trade. So we have entered at 71. Now we have already moved $76. The moment it has moved, now I can do 71 and then update my stop loss. I'm not even risking $5 on this trade, but if I win, I'll be able to make $80 on this particular trade, right? For this to happen, what is the time frame we have spent? Like 3 to 4 minutes. So imagine when I say 4 trades per day, it can be done within 10 minutes and you will be sitting idle. But for that 4 minutes of your day, you should be watching the charts and preparing yourself maybe for hours. So, whether this trade is going in my direction or not, I'll be considering, okay, this is one of the 1,000 trades I'm taking this year. So it doesn't matter whether I'm making money or not. It only matters whether I have followed my process or not. And that process could be very simple. When I say very simple, because 45 minutes we have discussed whole about how to set up your trading mindset within thinking probabilities, and 15 minutes we are going to discuss about the charts and how to read the charts. Let me take you through the presentation. I have created a small presentation, and guys, this I have did it years back. Okay, so what we have within candles, can you all type down? So I want all of your active participation when we discuss this, sessions. What is there inside a candle? Every candle has high, low, open, close. Thank you, Mesh. Open, close, high, low, OHS, OHLC, or whatever, high, low, open, close. Yeah, everyone understood, right? So the open is the first one when the price is opening on the day, and then high or low, and then the close, right? Market can go up and come down and even, do roller coaster here and there, and close is the final number. So when we say open, high, low, close, any chart, any asset, any stock or indices, if you take out the name of that asset and if you take out time frame of that particular asset, whatever you are doing analysis is same. So that is in my opinion. Okay, again, fundamental guys might say something else, but in my opinion, this is what happens. So when we have an open, high and low close, let's say we have two scenarios, bullish scenario and a bearish scenario. What is happening with respect to bullish scenario? The price has opened low and went down and then pushed upside, right? Now I want all of you to read it like this. Market opened, sellers tried selling initially, then buyers pushed the price and they were greedy. When the price is going up, they were in hope. They were thinking that, okay, I can get even more and more and more. They tried pushing the price up till here, and some of the buyers have closed their position. That's why we have a green candle like this. Let's say when we have the candles again, we have the open, we have the high, we have the low, and we have the close of that candle. Vice versa, when you discuss about a bearish candle, you have to think, okay, buyers have tried pushing the market upside. That's why there is a tail or a wick or a shadows have formed. And then the sellers dominated the market and they went on selling and the price closed further low. And some of the sellers have booked their profit. And that's why this is in red color. Everyone agree with me? Because why I'm taking this, I have just given you a example. When you read a bullish candle, you should be asking yourself who is in control. So with respect to left side green candle, who is in control?
Buyers.
Buyers are in control. With respect to right side red candle, who is in control?
Sellers.
Sellers are in control. That's it. As simple as that. Let me go to the next candle. And the first candle shows strong bullishness, strong bearishness. Another candle shows, buyers have had a fight with sellers. That's why this wick has formed. Now, let me pick someone, or you can come voluntarily and tell me what has happened with respect to here, this particular candle.
There's an equal fight between the buyers and the sellers.
Great. That's it. So an indecision candle or a doji, you can call it whatever the name you want. But what is happening here then?
It's like buyers and sellers are fighting equally, just buyers have a slightly upper hand.
No. Here, sellers have tried initially pushing the market because the market opened and then went down. But buyers were able to push the price all the way up and then keep the price upside, which means sellers have failed here. And this particular candle has more strength than this candle.
Okay.
Why I'm saying this? Because this candle is basically only buyers are holding the day, right? There could be a fight in between, but if you think this is a 5 minute candle, and within that 5 minute candle, what has happened? Buyers have controlled the entire journey, right? But
Yes.
on other side, sellers have tried pushing the market, but buyers have even reclaimed the entire rally. Let me just try looking at the price because 78 is my actual target. And the best thing what I like about Friday sessions, this is the one which I discuss with the teammates as well. Let me see what has happened. So I do live trade. I don't, trade on a demo and show you guys, okay, I'm trading on a demo. I do live trade, so bear with me because this 1 hour, we have to make sure that we are making some money rather than just taking sessions. Okay, so that's it. And so the final question you should be asking yourself, who is in control, whether the bulls are in control or bears are in control, and the importance of the wick. When you have a wick, you should understand, okay, there is a fight and who won the fight. Okay, simple as that. Let's go with the other thing. Let's assume we have a strong weekly candle, but that strong candle could be like this. So Monday bulls have tried, Tuesday again bulls have tried, Wednesday market was choppy or sellers have dominated. Even, you know, Thursday sellers have dominated, and Friday again bulls have tried and pushed the market up and closed. So what is the overall message inside candlesticks? Anyone?
Buyers were in control over the overall week.
Overall week, buyers were in control overall. Okay, great. Anyone else?
Yeah, between
I mean, okay. A small question. I
Yeah.
don't know, is it a conclusion or a question? So basically, on the last candle you showed on in the last slide,
Mm-hmm.
where the buyers got in control at the end, the last second one, yeah. So is it safe to assume that the next proceeding candle will be upper hand for buyers and buyers are still taking in control? So
There is
the
nothing
proceeding
safe.
candle will again go
Yeah,
green?
that's what there is nothing safe with respect to market. Next candle itself can form like this.
Okay.
Sellers
And
can.
ideally, on what time frame you see this candle?
No, we will come to that because,
Okay.
when, see, the moment you think, okay, I'm seeing a single candle like this and then start trading on this, what is going to happen is basically you will make decisions subconsciously when you see candles like this. I don't want you to make subconscious decisions. I want to keep it open. You have to ask very simple question: who is in control? I don't want you to think whether the next candle is
Okay.
going to go up or down. I want you to ask yourself a simple question: who is in control? Okay.
Okay.
Because why I'm saying is, see, the moment you make a subconscious decision, okay, the next thing, what is going to happen, that is where, as a humans, we go wrong and we tend to do mistakes in the markets. That is where we cannot change our biases. So, as soon as you told it, when come on, it's not as soon as me telling price goes upside, man. So sometimes it happens precisely. Sometimes I go wrong, but when I do live sessions, I don't know, it is happening in my favor. Yeah, Arikuti, give me.
I'm eating. I forgot to take the banana.
Yeah, that's fine.
I fall down the banana.
Yeah, that's fine. Sorry.
Fall down, that's why.
So guys, the next one is weekly candle, which we have discussed. So when you start looking at candlestick additions, that's the next topic which we are going to say. You should be understanding one thing. You should be always focusing on the closing of the candle. So there is no such thing about, in between whatever happening. If we are looking for a direction and if you are looking for a weekly candle, then that week has to close and it should give you an update. Okay, now buyers are in control. Because if you think from a candlestick perspective, Thursday, end of the day, this particular candle was looking like this, isn't it? Are you all agreeing with me?
Yes.
Yes.
But Friday, what happened? Buyers took the control and closed that entire thing. So I want all of you to make a note. On 5-minute time frame, the last 2 minutes is the closing of the candle. On a 15 minutes time frame, last 3 minutes is the crucial part. On a 5 minutes, again last 1 to 2 minutes. On a 15 minutes, last 3 minutes. On a 30 minutes, last 5 minutes is crucial. 5 to 7 minutes is crucial if you're looking at on a 30 minutes candle. If you're looking on a hourly candle, last 15 minutes is crucial. If you're looking on a 4-hour candle, last 30 minutes is crucial. If you're looking on a daily time frame, last 4-hour candle is crucial. If you are looking on a weekly time frame, the last day is crucial. If gold closes anything above 4080, then we could see safe haven rally happening in the upcoming days. That is one probability. I'm not sure how the market is going to close today. And yeah, I think we hit our targets, right? Risking nothing on that particular trade. Now gold is trading 4097. That's great. Done. So the next thing, same concept, different days. So you should be waiting for the closing of that candle. Next thing, it can also be like this, an incremental, push from the buyers. Still, on the third day, I'm not sure who have asked that question. If usually what we tend to do mistakes, when we see this candle, the next candle comes, let's say on a third day, if bearish candle comes, we assume that sellers have already stepped in and it's going to go down. The moment you assume, you cannot think in the long direction. The moment you make a subconscious decision in your mind, you won't be able to rethink openly with respect to what I'm looking in the market. So I want all of you to clean your slate when you're looking at the charts. Whatever happened with respect to 2 minutes before, 5 minutes before, or if I'm looking at this chart right now, I haven't done any trade yet. Now I'll be looking this chart as completely new. I'll be asking myself, who's in control? The trade which we have done from here to here, that does not have even a single, chance, or for us, that trade has been done and we made profits. But for the market, it doesn't know whether we are going to make next trade. It doesn't know whether we are going to look for short or long from this point. So if you can clean your slate and then start fresh every single time when you do the next trade, that will be much more better. Yeah, so let's try to close this topic. We have discussed this candlestick analysis, weekly candle, even indecision could be like this, candlestick addition. Okay. So far, I hope you guys are able to understand how the candles are formed. Now from the next session, we will discuss about, we have seen, okay, if this is the weekly candle, then daily could be like this, or any sort of randomness you can put it through. But when you have daily candles, then you should be able to do candlestick addition and analyze the market sentiment. Okay, so this is the simple task for all of you for next week. Whenever you see any time frame, let me just give you a live example. When we say, okay, I'm looking at these entire updates and these entire, charts, and I'm just going ahead why I have took long trade. So as you all of you know, there is a great tool which we have launched basically last week. And in gold, daily, weekly, 1 hour, 4 hour, everything seems long with respect to this particular trading compass. What it does, I can send you a link for all of you to go through this platform. There might be a challenge. So if you are inside the platform, I've just uploaded another chat window. There is a, planned maintenance is happening. Tomorrow, this platform might not work for you guys, but whenever you're free, you guys can check and make use of that platform. But we will discuss in detail in the upcoming sessions. But when it comes to the market, I want all of you to think how to do candlestick addition. Let's say I'm taking 4 hours. If you do an addition with respect to these 3 candles, I'm talking about first, second, and third. If you do candlestick addition on these 3 candles, how will you do it? You are going to do like this, right? So the first candle opened here. So you're going to draw something like this. And then it pushed, sorry, not here. The first candle opened here. This is the opening of the first candle. And then it pushed upside till here. And it went down till here. And the next candle opened and closed here. And the next candle opened here. And then it went down and then closed it here. And the next candle opened much lower, but it went down and then pushed it here. Now, if I just draw that 3 candlestick together, this is how these candles looks like, right? So who is in control here?
Buyer, because they pushed back again.
I need answers from everyone. Simple question you should ask yourself, who is in control?
Buyers.
Buyers in control. Why the market went up? Because buyers are in control,
Buyers.
right? So imagine what you have learned today is a powerful tool, but it is very simple and effective when it comes to charts and doing your analysis. So
Yes.
don't think this is an additional task, but when you do analyze chart, please mark any time frame and do a candlestick addition like this. Take a picture and keep it with you, and just do 3 pictures, and it should be candlestick addition explaining, okay, this is the opening, this is the low, this is the high, and this is the close, right? So watch out for gold, anything closing above or below for 4084, and let's see if it is playing out. Yeah. So I'll wait for all of your questions for another 7 more minutes. If any questions, any doubts, feel free to ask. Don't think that you're attending a session. You know, this is what I've done, and
Hi,
keep it.
Sinu.
Yeah, yeah. Raghuram, go on.
This is a very random question, but irrespective of how much analysis we do, there is still no 100% probability the trade will go in our way. So, would you say luck also matters a little bit or not?
Okay. Since it's a personal question, I'll give you a personal answer because
Yeah.
that will be too personal. All right.
Because, like right now, you took the trade, right? Long on gold.
Mm-hmm.
So, if I had taken it, the chances of it hitting my SL before hitting my TP would be very high.
See, because I don't care whether that trade have hit my TP or target. I'm not sure because I don't know whether if you have watched me doing the live trades, even when I hit my stop loss, I'll keep the same smile. Inside out, I'll be crying, but I'll try to keep the same smile and walk away because I know that this is a part of the game. The moment you start accepting the loss, luck is created, man. With respect to
Okay.
my personal opinion, luck is something you create yourself. You create an opportunity to being lucky.
Okay.
So that's what my personal opinion.
Okay. Thank you.
I also have one question, other.
Yeah, yeah.
Like when we do the like trading, we do the stop loss and take profit, but sometimes it won't hit. In that case, what your suggestion, like how long we should keep open our trading, like half an hour, or like how long would you suggest to like keep open that particular trade?
Okay. So say for example, if you are trading on 4 hours time frame, okay,
Mm-hmm.
then your stop loss should be in 4 hours. And your target should be at least 4 to 12 hours. If you're
Mm-hmm.
trading in 15 minutes, then your stop loss should be maximum 30 minutes. And your target should be, let's say, 3x or 4x of that particular time. Because the
Mm-hmm.
moment you enter into the market, see, most of the people think that trading is all about trading the charts, trading the asset, but trading is all about trading the time. You're actually trading the time. If you're wrong, then it will tell you within couple of minutes itself.
Mhm.
How it will tell you? It won't
Yes.
move in your direction.
Mhm.
It will go sideways, or it will try to come down to TP and give you a hope that okay, it is moving in a direction. You will think that okay, my TP is safe. Hello, Bhagwan, save my stop loss or target, and then you start thinking with respect to that target. So those kind of things will happen when you. So okay, when your trade is going wrong and what is the time frame, the moment you start thinking about that trade inside your subconscious about hope, regret, or any sort of emotion, then you're wrong. I think it will take some more time for you to be in that level. I'm discussing
Oh yeah,
too much.
no, because
But
yeah, because I think some it's going in my way, and then next second it's again like going down. Like that's what happen always. So that's why.
then you're looking at the longer, shorter time frame, very short time frames. You have to prepare yourself to be able to accept that in your brain. Because if you look at 1 minute time frame, you should be, thinking 100x more than the algorithms, 100x more than the human brains or whatever we could create, because every invention, you're fighting with the market and algorithms and the people who have loads and loads of money, and whatever we have is very tiny thing, right? And we cannot move the market as well. So with respect to that, if you think, you should be start moving to longer time frame so that you have at least a breathing space. Once you master at least 1 hour time frame, then try to come for 15 minutes. Once you master 15 minutes, then come down for 5 minutes. Once you master 5 minutes, then come down for 1 minute. But if you start looking at 1 minute, the chance of you being successful is in the initial stage, it would be tough.
Okay, yeah, that's good. Because I'm always in 1 minute chart, maybe because of that. Yeah.
Yeah, maybe. So, see,
Mhm.
without that, I said to you, right? You're looking at 1 minute or lower time frames, because that's why your heart rate is beating so much, and making money and losing money. You're seeing the numbers plus
Mhm.
minus within fraction of seconds. You have been prepared for that. Please focus on hourly time frame and keep a stop loss. So when you Okay, now you were riding, a Ferrari. Now I have given you a Bullock cart. If you start looking at, let's say 4 hour time frame. So find a balance between what you are doing right now. I don't want you to change the way who you are. I want you to align with respect to the markets by who you are. So that's the moment you can, map it out towards your success.
And is there any, because this is my first session I'm joining with you. So how can I watch your previous one? Is there any uploaded recordings or?
Yeah, I have uploaded all the recordings, So if you go to the platform and there is a passion development, here I have uploaded all the sessions. But if you start watching all the sessions, it will be too boring. So here I have uploaded the first session, which we have took on September 5th. I have recently started, explaining the way I'm explaining right now. And if it is helpful, you can go and watch on the platform itself. Or let me try if I can find that recording, I'll send it across to you guys.
Thank you so much.
And please don't forget to send this one into the group also, the batch
Yeah,
0311, please.
yeah, sure. I'll send it across to you guys.
You know,
I'll do one
is
thing,
this the first
send
session?
it.
Sorry.
Sorry?
Is this the
Yes,
first session?
this is the first session. We are restarting from today. So those who have
And the
missed,
same sessions are on the platform.
no, I mean, like on the platform, September 5th, we have taken for the other batch, but
Okay.
I think this session have come out really structured.
Okay. So
So,
it's better to follow you from this session.
Ritik, you should tell me, man, how's this session, by the way?
So
Because
actually, I attended one of your sessions before, but I attended one of your fourth or fifth session from the September
okay,
batch,
okay,
and everything went over my head, and it was like too overwhelming for me. But this session, it felt a bit easy for me, and also I could understand whatever you said.
okay. Thank you so much, brother. Ritik, you should tell
Yeah,
me, man, you are attending all the sessions.
yeah.
Getting bored.
No, no. So it was quite amazing because each and every session has each and every meaningful insights. For
Okay,
example, today I learned that, for example, you told that in 5 minutes you just need to see last 1 to 2 minutes candle. In
okay,
15 minutes you need to see last three candles,
yeah,
3 minutes. So this type of quite insightful things I got to know in this session as well. It was
okay.
quite amazing.
Thank you. Thank you so much, brother. Take care. Okay, everyone, enjoy your weekend. Please try to, don't force yourself into the trades. It will happen and it's an easy task. Don't make it complicated.
Yes.
Yeah. All
Thank
the
you.
very best, guys. Take care. Bye
Yes,
bye.
thank you.
Thank
See ya.
you.